Good afternoon. This is Mark Espy with MarketTamer.com. I'm also known as the Robin Hood Trader. And before we begin today, I must remind everyone that everything we speak of today is for educational purposes only, never to be construed as a recommendation to buy or sell anything. Please do your own due diligence. Well, we continue to push sideways into the channel that I had pointed out about 3 weeks ago. I felt that we were going to be moving into a narrower range channel, which is exactly what's been going on. When we did break down below the 200, we had this large, immense channel, which was approximately 1,000 points in this trading range, and it did choose to come down here and trade sideways. So right now the channel is roughly between 9,800 in the downside and about 10,300 on the upside. So we're looking at about a 500 point channel here. Today's action was unimpressive, to say the least. The volume was not particularly impressive, and we put in a hanging man type of a pattern at the top of this range. This still could continue to move up to the top resistance area right here, which also coincides with the 200 simple moving average, which, by the way, I think is going to be a formidable obstacle to get back through. As you can tell here, we broke down below the 200, and as is typically the case, when you break down below a major moving average like that, it will come back up and retest it, which it did, and it failed and then came back down. I'm thinking that this recent move up in the last 3 or 4 days is going to be nothing more than another retest of the 200. I don't believe it's going to break above that area. I also feel pretty confident that the support area down here just below 9,800 is pretty stout as well. So I feel that we'll continue to trade in this range. As I had pointed out last couple times, I felt that we were going to move down in the VIX and begin to retrace back toward what I feel the mean is, which is about 25. So I'm thinking that volatility will start coming off of the market. We'll begin to get a little bit more sanity in this market. If in fact it does break above this resistance line here, we would look at 10,700 on the swing high that was put in back in January. Also the swing high here in May at 10,900, and then the top here is at 11,258. We did have a crossover on the stochastics, which coincided with this move down here. We had, and actually there was a bullish engulfing pattern, maybe not classic, but very close to that, put in about 4 days ago. And then we had follow through up through today. But as I say, I feel we're going to remain in the channel here. We did have a cross over the MACD line, crossed over the signal line here, and the histogram has begun to pop its head on the other side of the zero line, showing some momentum to the upside, but not anything notable. Okay, with that, we're going to move on and take a look at the SPX.